Welcome to our deep dive. Today we're tackling a really big question in investing. Why do smart people, people with all the data, all the tools, still struggle so much in the market? We're digging into Parag Parikh's book, Stocks to Witches, because, well, his whole point is that it's not the market beating you. It's usually you beating yourself.
Exactly. And Parag Parikh, he founded PPF Mutual Fund, but he wasn't just about numbers. His core idea was all about human behavior,
Yeah.
psychology, emotions. He was really ahead of his time on behavioral finance. His book, it kind of blends that classic value investing idea, buy good stuff cheap with needing to understand yourself to actually pull it off. He makes these pretty complex financial ideas feel, well, simple, relatable, which is super important today. Things move so fast.
Okay, so let's unpack that central theme. Mastering yourself, not just the market. What's the first big lesson Parikh hammers home? He talks about greed and fear, obviously, but one thing that really stood out was impatience. That seems to be a huge wealth killer.
Oh, absolutely. Selling a good investment just because you're bored or tired of waiting. That's where so much potential gets lost.
Yeah.
Parakeet basically says your superpower isn't genius stock picking. It's discipline. It's patience. It's being okay looking, well, maybe a bit foolish while you wait for your thesis to play out.
Right, so if impatience is the enemy, what's the defense? That brings us to the second idea, right? Value investing.
Yeah, timeless value investing. Focus on the business itself. Is it a good quality business? And can you buy it at a fair, or even better, a cheap price? Forget the daily noise, the trends everyone's chasing. This approach helps you build wealth steadily. Like the book says, it's more about staying rich over your lifetime, not necessarily getting rich super quick.
But sticking with that value approach, that takes serious guts, doesn't it? Especially when everything feels like it's going down. Which leads to insight number 3, long-term thinking. We hear it all the time, think long-term. But Parrick really frames it as time in the market beats timing the market.
It does. Consistently. But you're right, it's tough. How do you actually do that when your portfolio's down, say, 30 or 40%, and, social media, maybe even friends, are yelling about the next hot thing or telling you to sell? How do you stay the course?
Yeah. How?
Well, that connects to the fourth pillar. Keep it simple. Simplicity over complexity. Parikh warned against getting lost in, complicated formulas or listening too closely to so-called experts making daily calls. When things get too complex, our emotions just take over. It's almost inevitable. So a clear, patient, rational approach focused on what you actually own the business that's way more effective than trying to constantly outsmart everyone else. It's kind of like an emotional defense mechanism.
So, okay, the book's almost 2 decades old. Why are we talking about it now? Why does it still feel so, well, relevant?
Because human nature hasn't changed one bit. Panic selling, chasing hot tips, FOMO, fear of missing out, it's all still here. If anything, it's maybe amplified now.
Right. With instant news, trading apps on your phone, crypto trends flying around.
Exactly. All that stuff just speeds up the emotional cycle. You see an influencer hyping some stock or coin, and the pressure to jump in is immense. Brake's advice forces you to just, slow down, take a breath. Look at the actual fundamentals, not just the buzz. He really saw investing as a journey of, self-discovery. Knowing your own triggers your fear, your greed, your impatience, helps you make decisions that you can actually live with long-term. Sustainable decisions, not just frantic trades.
So the big takeaway for you listening is probably this. Real investing success, it starts inside. It's about managing your own behavior. Stay patient. Let compounding do its thing. It's powerful, but it needs time.
Yeah, and since Parikh frames this whole thing as a journey of self-awareness, maybe here's something to think about. The final thought. Where else in your life outside of finance, maybe in your career or building habits or even in relationships, where does your own impatience or maybe your own greed get in the way of a really important long-term goal? Maybe the toughest challenge isn't the market ticker after all. Maybe it's looking in the mirror